start of the year, many expected the dollar to actually strengthen, with the president's trade war seen as more damaging to foreign economies. President Donald Trump's policies are having a major impact on the American currency.
In 1960, Africa gained its flags, its anthems, its presidents, but not its financial freedom. For decades, our leaders changed, our parliaments changed, our borders changed, but the money never did. If your currency is printed in Paris, if your debts are calculated in Washington, if every major import requires approval from banks in London, can you truly call yourself independent? For 65 years, that question has haunted African economies. And now, for the first time, there is a real attempt at an answer. A new global payment system has quietly connected over 180 countries, allowing them to trade, send money, and settle payments without passing through the old colonial gateways. No Paris, no London, no Washington, just direct transactions. Africa to the world. This is not conspiracy. This is not ideology. This is the first structural crack in a system built long before African voices ever mattered. And tonight, we will show you what changed, why it took this long, and why this moment might redefine Africa's economic destiny. The trap Africa has been stuck in. Since 1960, when most African nations raised their flags for the first time in 1960, the celebrations were real. Independence felt like a rebirth. New constitutions were drafted, liberation fighters became national heroes, and the colonial empires finally loosened their grip. But beneath the speeches and the ceremonies, one chain quietly remained unbroken: the chain of money. Because while presidents changed, the financial system didn't. Currencies across West and Central Africa were still printed in Paris. Foreign reserves were still controlled by European treasuries. International trade still had to pass through Western banks that acted as the global gatekeepers. Even countries outside the CFA franc zone found themselves caught in another web, the web of dollar dependency. Oil, wheat, machinery, medicine, everything Africa needed from the world was priced in one currency that Africa did not control. So here is the uncomfortable truth. Africa gained political freedom long before it gained economic power. And this design wasn't always deliberate. It was the result of systems built decades earlier, systems that made sense to the people who created them, but produced suffocating consequences for the nations that inherited them. For 65 years, African countries have been operating inside a financial architecture where someone else, often in Paris, London, or Washington, had the final say. Not because Africa lacked talent, or ideas, or ambition, but because the pipes that carried global money were never built with Africa in mind. And that is why what is happening today matters. Because for the first time in modern history, Africa is witnessing the emergence of a second doorway, a payment system that doesn't require permission from the old centers of power. A system not controlled by Western treasuries or dollar politics. But before we understand the impact of this new BRICS payment revolution, we have to confront something clearly. How exactly did Africa become trapped in this financial design? And why did it take 6 decades to challenge it? Stay with us. The next part will make everything crystal clear. Before we dive deep, like the video, subscribe and hit the bell so this message can reach more people. How the old system was built, the CFA franc, the dollar, and the hidden costs. To understand why the BRICS payment system is such a big deal, we must first understand the financial structure Africa has been forced to operate in for more than 60 years. Not the myths, the actual systems. The CFA franc, independence without control. When many African countries gained independence, the political power changed hands. But the monetary power did not. Today, 14 African nations still use the CFA franc, a currency designed in the colonial era, printed in France, and managed by the French treasury. Under this system, half of their foreign reserves must be kept in Paris. France calls it stability, fixed exchange rates, low inflation, access to European markets. And yes, there is stability, but stability with a leash. Because whenever these countries need to import medicine, fuel, or critical equipment, they must request access to reserves they technically own, but do not fully control. The system was meant to prevent collapse, yet it also prevented true monetary independence. The dollar dependency, a different kind of cage. Countries outside the CFA zone are not tied to France, but they face the global dominance of the US dollar. Oil, wheat, machinery, and most global commodities are all priced in dollars, even when the buyer and seller are not American. This means an African country earning dollars must convert them into yuan to buy from China, or euros to buy from Europe, losing money at every step. Every major transaction flows through Western correspondent banks in New York or London. Not because Africa is weak, but because the global financial pipes were built long before African economies had a voice. The hidden cost Africa has been paying. According to World Bank data, sending money to sub-Saharan Africa costs an average of 8.5% per transaction, the highest rate in the world. A domestic worker sending $500 home may lose nearly 10% before the money reaches her family. This isn't corruption, it isn't conspiracy, it is simply the design of a system that Africa never built. And for decades, there was no alternative, no second option, no other door to walk through. Until now. Stay with us. Chapter 3 reveals how BRICS opened that new door and how African nations reacted immediately once it appeared. The new door opens. BRICS, CIPS, and Africa's fast reaction. In October 2024, during the BRICS summit in Kazan, something quietly shifted beneath the global economy. While headlines focused on who attended and who didn't, a new financial doorway opened, one Africa had never seen before. Two major systems came into play: BRICS Pay, a parallel payment highway. This platform was designed to let BRICS members trade directly in local currencies without passing through Western-controlled networks. Brazil's PIX system inspired it. Russia championed it after being cut off from SWIFT. The idea was simple: why should two countries need Washington or London to approve their transactions? CIPS, China's global payment network. CIPS has existed since 2015, but in 2025 it exploded in scale. It now links thousands of banks in over 180 countries, processing trillions of dollars worth of transactions. For the first time, Africa could route payments around the old financial gatekeepers. This wasn't ideology, it was options. Africa moves quickly. Once the new door opened, African nations reacted with surprising speed. Kenya began restructuring Chinese debt in yuan, easing pressure on its dollar reserves. Ethiopia pursued yuan-based repayment to soften its debt burden. Egypt signed agreements to settle trade in local currencies. Nigeria renewed a currency swap, allowing businesses to trade directly in yuan. South Africa's Standard Bank joined CIPS, extending access to more than 20 African countries. These were not symbolic gestures, they were survival strategies. Africa wasn't choosing new masters. Africa was choosing freedom of movement in a system that had long kept it in a corner. But a new door doesn't mean a perfect one. And not every benefit comes without a cost. Stay with us. The outro reveals the opportunity Africa must seize and the warning it cannot ignore. The new financial horizon. For 65 years, Africa has lived with political independence but financial dependency. The CFA franc tied some nations to Paris. Dollar dominance tied others to Western approval. And global loans came with conditions written far from African soil. But today, for the first time since independence, Africa has something it never truly had. A second option. A new set of financial pipes. A way to move money without asking old powers for permission. This does not mean the yuan is the savior. It does not mean BRICS Pay or CIPS will solve every problem. And it certainly does not erase the need for better governance at home. But it does something historic. It gives Africa the power to say no, own terms. And the space to negotiate yes on its. The real opportunity is not choosing between Washington and Beijing. The real opportunity is building African systems strong enough that both sides must compete for access to us. Because at the end of the day, true independence means having options, and the courage to use them. Maybe, after 6 decades, it's finally time for African money to serve African interests. If you want daily updates on Africa's rising influence and global power shifts, hit the like button, subscribe, and turn on the bell so you don't miss any breaking stories.